Chris Vermeulen is back. He is the chief market strategist at the technicaltraders.com. Very calm day today as we're speaking, Chris. It's very unlike our meetings. Welcome back.
Thanks for having me, David. Always a pleasure. And yeah, it's a fairly calm, quiet day, and there's no doubt about it.
Yeah, the last couple sessions that we've had you on were very volatile days. It's been a very volatile week, but you weren't here on the program. Just yesterday, the markets were ripping much higher on the news that the ceasefire has been brokered between Israel and Iran. Of course, missiles are still lobbying back and forth, but a ceasefire was reached. Now, prior to that, huge volatility as the U.S. struck Iran's nuclear facilities, and Iran retaliated by hitting a U.S. military base in Qatar. Now, today, as we're speaking on the 25th of June, as of 11 a.m. Eastern, Bitcoin's up about 2%, gold is flat, the S&P is flat, the NASDAQ is flat. So everything's just kind of waiting, it seems. Treasury yields are up 72 basis points. That's the 10-year yield's up 72 basis points, so that's big. So what are markets kind of waiting for right now?
Yeah, so looking at the markets, obviously, over the past couple of weeks, I was away. I was hiking Kilimanjaro, and I came back to my inbox. It was pretty full with people saying how panicky the market has been. It's been volatile. But what's really interesting is actually when you look out at the price action over the past couple of weeks, it has been very kind of flat and boring. A lot like today. We've not a lot of volatility, but we've definitely had a ton of headline news, extreme news that definitely makes every little wiggle on the chart feel like a crisis. We've had the ceasefire. We've seen the stock market have a really with markets kind of coming to life this week. And today people are in pause. I think there's a lot going on. People are debating like what is going on with the stock market? What is going on with the global kind of war situation? We got the Toronto Stock Exchange hitting new all-time highs yesterday. The NASDAQ is flirting with all-time highs today. People don't know what to do. Either people have been betting against the falling market and they're deep underwater. The trades are going against them and we're hitting new all-time highs, which has people kind of frozen. When people get nervous, they freeze. They just don't do anything. And then people who aren't long the markets, they feel like they're getting left behind and they don't know what to do. Is this a real breakout or is this a fake out? And with the news with the ceasefire yesterday, people are kind of wondering, okay, is this just like a headline news and nothing's really changed? I think we've really learned in the last like 6 months or so that a piece of news comes out and there's a new rule set, and then like by the nighttime the rule's been delayed or moved, and so now everybody's like really questioning all of these big news pieces. Are they real? Are they going to change? So I think people are just nervous at this turning point. It's like most people are either on the wrong side of the trade or not involved in this rally, and people are frustrated. And now we have the ceasefire and new all-time highs, and they don't know what to do. And that's why I think we have a bit of a lull in this market, as you said, David.
Okay, can we just pull up a chart of the S&P 500? So it has hit its previous high in February. So the previous high in February was around 6150 for the S&P. What happens once we breach that level and sustain that level, Chris? What does that mean?
Yeah, well, once we break that level, from a technical standpoint, people who are short the market, meaning they're betting on falling pricing, they're going to naturally want to and somewhat have to cover, because now the market will be hitting new all-time highs. So what the market is good at doing is always trying to make a nominal new high or a nominal new low to try to run the stops, to try to push people's emotional triggers to make them eject out of trades. And so if the stock market makes a new all-time high, there isn't any overhead resistance. That's the problem with holding an inverse play or betting on falling pricing. When the market hits a new highs, there is no resistance. So if we hit that level and say it can hold for a day, say ideally it will hold for a week into a new high territory, people who are short the markets are going to want to cover. Also, they're probably going to want to get long the markets because now we're at all-time highs and the trend is up, and you generally want to be trading with the trend. So, the market probably needs to hold up for a week or, in general to say, okay, it's holding that level. But right now it's just in that turmoil. People don't know, is this a real breakout or not? Like the S&P 500 is stuck under resistance. If we look at the QQQ, for example, which is obviously tech heavy, it is actually already poked and is trading above to new all-time highs, which the Magnificent Seven are doing a bunch of that lifting. So on one side we have the Nasdaq hitting new all-time highs. The other side, the S&P 500 hasn't quite. And we're in this turning point. We're in a strong uptrend right now. We've had this what I called a dead cat bounce, which you and I talked about. I think pretty much on the day the bottom was put in place. Expect a very strong bounce, and this bounce is dragged out, and now we're testing all-time highs. And now it's kind of converting from potentially a dead cat bounce to a double top or maybe a nominal new high. But we got to be very aware this could very much so be a shakeout. This is what the market does. It'll get the shorts to cover. It'll get people who aren't long finally to get long, and it could create a pop. I show the Nasdaq and the S&P 500 could rally 5 to 8% over the next couple of weeks, and then have a sharp reversal. That would be kind of like an unwinding of people who are on the wrong side of the market, and also people who aren't involved yet to pile in and kind of push the markets higher. So this is something you and I actually talked about many, many months ago. I said maybe the market comes up and makes a nominal new high. It sucks traders in, it gets the shorts out, and we're starting to get to that scenario because the Russell 2000. If we pull the Russell 2000 up, which is kind of more of a broad market play, it is more of a growth stock play. It's not looking very healthy. It is stuck under the 150-day moving average. It's stuck under the big breakdown that we saw earlier this year. And on top of that, people are moving into the ARK ETFs. When we look at the ARK ETFs, this is the aggressive stock. This is where people go when they want to try and catch up and make money for, say, if they've missed the recent rally. If we take a look at just the chart of the ARK here, we've had about a 38% rally. And so this is leading the way. The ARK ETFs are right at the top of our hot list, meaning that's where money's piling into, volume's picking up. It's becoming the play that everybody wants. People think the market's going to go a lot higher. There's a lot more potential. And all these little things kind of tell me we need to be aware that this nominal new high in the stock market might be very short-lived.
The silver price has broken out to new highs for 2025, and Silver 47 is a name worth watching. Today's sponsor, Silver 47, is a U.S.-focused exploration and development company with a district-scale silver gold-rich VMS project located in south-central Alaska. Silver 47 announced plans to merge with Summa Silver to create a premier silver company operating in the USA, and has grown its high-grade resource base from 168 million ounces to 246 million ounces of silver equivalent on a pro forma basis. Backed by a proven management team determined for success, it is well positioned to unlock serious value for investors. To learn more, go to silver47.ca/David Lin, link down below, or scan the QR code here, and be sure to review their cautionary statements, forward-looking information, and risk disclosures, which are available on their website and on SEDAR+. Previously, we talked about a dead cat bounce like you alluded to. How do you know at a certain point that it's no longer a dead cat bounce and it's just a bounce that may be sustained? In other words, do you think it's still going to be a dead cat bounce, meaning that this rally that we've seen could not be sustained?
Yeah, I mean, ideally, it would have been nice if the dead cat bounce kind of stalled out below this level and then kind of rolled over. That would be ideal. It has instead muscled its way up. And now I wouldn't really say it's a dead cat bounce anymore. I would say, we got the huge bounce and rally, but now we're coming up to more so double, triple top territory. And now we just need to see how this is going to play. So, I mean, if I could pull that label off, I would say, okay, this is not a dead cat bounce anymore. Now we're going up for a double top or a nominal new high to see how this market plays out. And so that's kind of where we're at. This bounce has turned into a very strong rally. And now we just need to see if we're going to push to all-time highs and muscle higher for several weeks and continue to see the stock market grow, or is it going to create a lot of anxiety, a lot of emotional driven trades, the shorts to cover, longs to get in who aren't long yet, who have FOMO of missing out on any more rally? That's what we're trying to get a gauge now. So I would say we're more so in a double top-ish or triple top market environment, and we need to see if it's the real deal, a top, or if it is going to extend and continue to have another big push and rally to much higher levels.
So how would you be positioned right now?
Yeah, positioned, we're long the markets. So if we take a look, for example, like the QQQ here, you can see when the market started to roll over back in February, our strategy told us to get out. We were able to avoid the volatility and the crash. And then we started to get this bounce, and then the bounce turned into a really strong rally. We actually had a buy signal. So we've hit some targets. We've hit a 3%, a 10% target. We got another target way up here around 560 for the QQQ. So even though I'm bearish on the markets and I'm thinking this could be a double top, or I thought it was a dead cat bounce initially, when the charts are showing strength, you need to follow the charts, not what you think or feel. And so we're long the markets. We're long the QQQ. We're long now the S&P 500, and we're also long IBIT. We're long Bitcoin, which has a very strong chart pattern as well. Which, as you know, usually I'm not a Bitcoin fanatic, but this year and late last year we've had a few trades in it, and it is actually has very nice chart patterns, and it seems to be kind of a place to be at the moment.
All right. Now, Chris, the let's take a look at oil. I just want to take a look at oil for a minute here. Oil's been extremely volatile in the last week, with the news breaking out that Iran has been attacked, and then they retaliated. Yeah, look at that chart.
Yeah.
What do you do in that situation?
Yeah, so I'm not a huge fan of trading oil in this situation. Obviously, it has a series of lower highs, lower lows, so it is channeling down with lots of volatility. We did break back above this really critical line in the sand around that 65, $66. If we zoom back on oil, this was a really critical level on the chart that you and I and everyone else had spotted a long time ago. This was, you're either stuck above it or you broke below it. And we did break below this level. But oil is very sensitive to news and what's going on. And of course, with war, obviously that can spur on gold and oil. And with this whole news, we saw oil just shoot higher. It had a tremendous breakout and moved to the upside, about 20% to the upside. Now it's kind of pulled back about the same amount. I'm not a huge fan of trading assets that can move this fast when there's a ton of headline news and kind of events happening around it. It carries a ton of risk. So overall, I don't look at this spike so much as this rally as it has now started a new uptrend. It's broken back above 65. In fact, it's already back below 65 or at 65. It's a news-driven move. And so whenever there's a huge news-driven move and it creates a massive price spike, I usually kind of cross it out on the chart. I say, I'm avoiding that. I don't need to mess with that. I value my capital. I don't need to step into a landmine and wake up one day up or down 10 or 20%. There's way more assets, other assets to take advantage of and to play without this type of risk. So this big rally does not mean oil is going to go higher. I hear people saying it's going to go to $135. Obviously, that is all driven by news, emotions, and if more bombs get dropped and other deals or things don't come together. But I would steer clear of oil. And it naturally, to me, is in a downtrend. And unless more evolves overseas, then oil could get a rally and move higher. But again, it's going to be news driven, which means it's going to be very fast, dangerous moves. And you don't know what you're going to wake up to every morning. So things that have more volatility and risk, I move away from, versus most people like to move towards volatility. But I find that usually backfire, especially when it's around news. You have no idea what the news is going to be, and when news can move things 20% in a day or two, you're really doing a coin toss. And if you nail a couple of them, it's great, but the odds are eventually you give it all back with the next trade or the following one. So I would steer clear of oil. It's good to watch it and see the emotions and how things react. It's a good way to learn and learn what to generally avoid. But yeah, I'd be very cautious around the energy space.
The general downtrend that you've highlighted for us, is that downwards for oil still? And when we're looking at these trading channels here, we're looking at a protracted downward trend over the last couple of months. Now, from a technical perspective, what does that usually mean? Does that mean that this trend is likely to continue?
It does, yeah. Overall, the trend is down. I mean, let's take a look at the monthly chart and just see how that looks. If we were to take a look at the monthly chart and just put it in the chart, squish it in here, you can see, I mean, oil in general, I mean, this is obviously it's a huge range, but if we were to kind of trim off the highs, trim off the lows, you can see the average range that kind of oil kind of plays in. And so it's somewhat in the middle of the chart. We can draw a line right across through this kind of level, and prices naturally above it or stuck below it. And so we're kind of right into this neutral territory. I still think we're going to see oil This big spike you can see on this candle on the monthly chart, it rallied up and then it got slammed back down with selling, which indicates it's an emotional move, a news driven move generally. I do think we're going to see eventually unwind back down to the 50s, 40s going forward. The trend is down. I believe we're going to be stuck in this lower quadrant for quite some time. Now, obviously, that'll get trumped if we have pipeline and oil, all that stuff, war stuff carrying over, then oil could very easily buck that trend and move up. But the charts are pointing to lower pricing and this giant monthly spike. If you get away from the daily chart in the news, you just look at the spike, you'd be like, oh, oil had a big rally. It just got slammed. There's natural selling pressure because it's in a downtrend. Any rally is getting sold into. And so the odds are lower prices for oil is what I see.
Let's take a look at the dollar, and then we'll do the precious metals after that. Excuse me, I have a bit of a stuffy nose. It doesn't feel like summer here in Vancouver. So the DXY has been, again, I bring this up because we're just talking about this downward channel. And I wonder if the same analysis can be applied to the dollar.
Yeah, there's no doubt the dollar right now is in a downtrend. It's trying to figure out if it can find a bottom or not, but it is all the moving averages are sloping down, the 150-day, the 50-day, the 20-day. They're all layered in the right direction, saying, okay, the trend is down. So right now it's trying to figure out, is it going to find some traction? We've had some huge volume. We've had very extreme price action. Usually these are early warning signs that the market's trying to put in a bottom. Doesn't mean the bottom is in, but it means it's getting closer. We've had a pretty big rally. We've poked down some nominal new lows. The dollar is definitely in a downtrend, trying to find support. The monthly chart, if we take a look at it, you can see here, in a nutshell, it's kind of doing the opposite of oil. Long term, when you look at it, it has a series of higher lows. It has a series of higher highs. More or less, it trades sideways. It moves up. It trades sideways. It moves up. It trades sideways. So it is more or less still from a long-term investor. Like I move my money to US dollars. I've been doing that really since about 2010. And in the grand scheme of things, looking at this long-term trend, the dollar is definitely pulled back significantly, but to me, it's still within the uptrend. It is getting close to changing its long-term perspective, where I'll be like, okay, I don't want to hold the dollar anymore. At this point, it's still kind of hanging in there for where I'm going to continue to hold the US dollar. But if the charts start to turn even more and start to show a bearish pattern forming over the next couple of months, meaning more so a bear flag pattern, and it starts to want to break down, then I definitely want to get out of the dollar and I want to move over to probably the Canadian dollar and go from there. And of course, if the dollar does keep continuing to collapse, that could send gold up sharply and mix the falling dollar with war, and it points to much higher gold prices. So we really have to see. We're at a critical turning point for a lot of asset classes to have some major turning points happen.
Yeah, let's take a look at gold now. $3,300 is the latest price on my screen. It's fallen from $3,500, which it briefly tested. And now people are just waiting to see what's next. It's been consolidating for quite some time, but this chart that you've just zoomed out on, it looks extraordinary. This huge parabolic move on gold that historically is just not normal. Anyway, I'll give you the chance to talk about the short-term price action as well as the longer-term trend here for gold.
Yeah, I mean, this is the long-term monthly chart. It has a very strong chart pattern. I mean, we can use Fibonacci extension and base price off of this recent run up. We've got this pullback down here. We can carry it forward. We're testing. We're right in that area where it's trying to figure out if it's going to stall out or start another run. So the monthly chart right now has hit its 100% measured move based on the most recent run and significant pullback. But when we drop to the daily chart, there's no doubt gold is still in a strong uptrend. And if we drop to the daily chart, what we have seen is gold just like in the past, it rallies up and then it consolidates for a while. It's rallied up. It's consolidating for a while. It is trading right up near all-time highs. There's a ton of uncertainty. There's war. There's all kinds of things, wars going on. And this is really just a consolidation. Gold, from a technical standpoint, is in an uptrend. It's in a long-term bull market. It's in a favorable condition. And I think this is going to want to push up. The next upside target is about $3,750 per ounce for gold. And really, it just needs to work itself through this consolidation. I am surprised gold didn't really take off in the last week or so with what's been going on in the news and overseas. But overall, it continues to hold its value. And I think it's going to want to push higher as the uncertainty and fears continue to creep in. So you definitely do not want to be betting against gold. I hold a lot of physical gold and silver for the long term. Overall, we did play a gold move. We're out of gold as a short-term trade, but long-term investors, I mean, gold really is, I think, a solid investment long term. And you just have to ride out the waves that come with it. But it is pointing to higher pricing still.
Would you say you're a little more optimistic on gold's prospects medium term than you are on the S&P 500 right now?
Yeah, I'm more bullish on gold. I think the stock market, even if it pushes higher, or if the stock market trades sideways and pulls back, I think gold is going to hold its value and potentially actually push higher. So to me, gold has the least amount of risk and will hold its value and potentially move higher more. It's like today when we look at the stock market, we have the Nasdaq is up and the Russell 2000 is down almost 1%.
Yeah.
The SPYD, which is the dividend space, the top dividend stocks in the SP 500 is down 1.2%. And that's just telling us, right now people don't want the boring stuff. They're not really moving into gold. They're moving out of boring dividend stocks, and they're moving into the ARK ETFs. They're moving into Bitcoin. They're moving into growth and aggressive stuff to try and make a bunch of money. And I get that, but that to me is a warning sign. And I think gold will flip and extend higher during this over the next week or two and want to push up towards that 3750 while the stock market starts to struggle with these all-time highs. I think we're going to see the stock market gap to all-time highs, get sold off and rally back. I think it's going to be a volatile 1 or 2 weeks as the stock market tries to mess with investors. Like, is it a new bull market? Is it, just a topping phase and a fake out? And that's what everybody's trying to gauge. I think that's why it's a little quiet today. Yesterday was a big move. People are they're scratching their heads going like, okay, what's going on? Is this like the real deal? Is this just manipulation and news driven move? That's what people are trying to figure out. And same on my side is
Well,
what is this market doing?
let's take a look at the last time gold has behaved this way. So it's been consolidating range bound for a couple of months. I would say 3 months now, ever since basically the beginning of April.
Yeah.
It's been trading range bound between 3,200 and 3,400. When was the last time it's acted this way, like, just range bound trading pattern for 3 months or more? Can we maybe just
Well, really,
zoom
it
out?
comes right back down to last November through the end of the year. The price action is actually very similar to what we saw before. If you look at this, we had an initial sell-off. We kind of had a bounce and a bounce and a pullback, and then eventually it started to work its way up. We've kind of had the same. We've had a pullback, a sharp pullback, a couple of bounces to the upside, and I think eventually we're just going to see this continue to go higher. This is just a typical consolidation. What I like about this move that we have right now, which is kind of similar to this one over here. You have a pullback, you have a bounce, and then it sells off with some big volume. Well, we've done the same over here. We pulled back, we had a bounce up, and then we came down to a lower low. It's called an ABC correction. So you have an A, B, C, and the break of this little pivot low here creates panic in the stock market or in gold. People bail out of it. It's that lower low that spooks people out, and then the market starts to want to firm up and go higher. We kind of had the same over here. The market pulled back, it had a bounce, and then it sold off. We had a lot more fear. There was a lot of technical levels that matched up with this high that we had over here, which is why I think we saw an extra bout of selling pressure. But overall, we've had the same type of scenario where it's flushed the market out. And I believe we're kind of like right here, right now. I think the market, gold is going to start to firm up and start to go higher. So I think if there's a place to get into gold, I think this is kind of it. I think from here, it's going to want to work its way up and to the right over the next 1 to 2 or weeks or longer.
Can you say the same thing about silver? Silver kind of moved. I don't know if we talked about silver last time. I can't remember, but silver moved up dramatically in the last 2 weeks or so. And interestingly, it did that during a time when gold was relatively flat. So it wasn't following gold at all when it moved up.
Yeah, and this is what I see fairly often. Like gold is to me is the most consistent barometer for trading and for getting global sentiment. Gold started to flatline and stall out, and silver had this huge takeoff. And usually that's what happens. We kind of see kind of savvy investor money looking for safety and security and low volatility. They move to gold first, and then it becomes kind of the play that whoever's going to go to gold is already in it. And then eventually it starts to kind of get boring. And then investors are like, well, what's the next play? And then silver suddenly pops and takes off. And that's what we've seen just based on this rally here using Fibonacci extension. I mean, gold, you and I had talked about this. It came up and hit this 618 level of a Fibonacci extension. If we hit this level, we generally go up and hit the 100% measured move. And so we've hit that. And now we got the volatility, and silver's trying to figure itself out. If we were to kind of go to the extremes, there's still potential for silver to run up to about $38, which is something I think you and I talked about last time. The next push is about $38. If we zoom way back on the charts here, it's a very significant resistance level on the chart from back in time. I got to go way back here to 2011, 2012 level. But overall, if we come back here, we're going to be coming right up to a major significant spike in price before it really had a sharp reversal. So again, I think we're going to see gold, silver, and miners want to push and move higher. And we have been seeing the gold and silver miners actually perform very well. If we look at GDX, for example, they have performed, they've been pushing to new like 52-week highs. The SILJ, which are the small cap silver stocks, they've had a huge pop, and now they have this nice pullback. If we take a look at the pullback, it has this A, B, C correction, which it breaks this little low, creates a bunch of panic, and usually a reversal. And this is a bull flag pattern. This is pointing to sharply higher pricing for silver miners. So if we have more uncertainty in the stock market, which I'm sure we will, I think we're going to see gold, silver, and miners really do well. And the fact that miners are now coming to life is a good sign. I think we're going to see one more big push potentially in the stock market, 5 to 8% to the upside, and we could see gold, silver, and miners actually have another big push and go higher. So the charts are looking favorable at this point for quite a few assets.
Let's just sum up here. So if the S&P 500 does roll over and gold stays firm or even goes up on that downward move, what happens to miners? You know, the age-old question that we've been talking about for years: do miners follow gold or do miners follow the overall stock market if they diverge?
Yeah, and that's the trap. That's the hard part with miners is you don't know if gold miners are going to get pulled down with the stock market or if they're going to buck the trend and go with gold. So it adds, you go from like a 50-50 coin toss to like you have a 33% chance of doing well with the miners.
Yeah.
That's the hard part. And that's why I always default back to gold. I'm like, I'd much rather consistently make money than have a low probability play that moves really fast against you if you're wrong. So I do feel like kind of gold is still that boring conservative play. It's about making money, not about making as much as you can at this opportunity.
Right.
So yeah, that's how I would see it: is physical gold itself, or a gold ETF versus the miners. They carry a lot more lower probability of making money.
Okay. Great. Finally, are you this excited about Bitcoin as well?
Yeah, I mean, if we take a look at Bitcoin, it continues to muscle its way higher. I had talked about this on Monday, this gap down, this fear in the market, and how these gaps tend to act as an oversold kind of washout low, and how the market's likely going to want to rally back. And so when we look at Bitcoin, it has a very strong bull flag pattern. It's rallied up, it's flagging sideways, and maybe it wants to come back down for a longer period. But overall, this pattern is pointing to much higher pricing. We're looking at like $134, $135 $1,000 per Bitcoin if this breaks out. And so we've been long this for a little while, and we have our stop at our entry price. We've already locked in some gains. So, you know, if you're in Bitcoin right now, it's more so let the charts mature, let it do what it's going to do. You know, we've got Bitcoin trading right across these all-time highs back over here, which is what I like. I love price to come up and then build a bull flag through this area, and all it's doing is eating up all this supply. It's building a new launch pad. And so Bitcoin has a really nice chart. Now, the caveat here is if the stock market sells off, I believe Bitcoin will sell off as well. So it's not going to probably act like gold. I think gold will hold its value and potentially become that everybody might want to move to physical gold when the stock market looks like it's topping out. But Bitcoin, I think we'll see money move away from Bitcoin and sell off. It moves very similar to the NASDAQ in terms of if NASDAQ goes up, Bitcoin goes up, and vice versa. So I like Bitcoin, but we have to just let the charts do what they're going to do. At this point, you should be long or expecting it to go higher, and that's kind of it in a nutshell.
Okay, so to sum up here, you're currently long the markets. You're expecting more of an upside move for the S&P and the stock markets. I guess we'll follow up in a few weeks, but my closing thought is, why the kind of change in tone rather, today versus a couple of sessions ago when we had you on last month, when you were feeling a little more uncertain, a little more negative, and now I'm just getting the sense that you're a little more optimistic, a little more sure of this upside swing that we're getting.
Yeah, so I think the big difference is we've more or less kind of flipped from a dead cat bounce to this is a rally, and now the markets are trying to make new all-time highs. The strength of the market has kind of picked up in terms of the underlying technicals to some regard. And the fact that we're hitting new all-time highs on the TSX, on the NASDAQ, that's telling us this is not a bounce anymore. It's actually a rally because we're hitting new all-time highs. A bounce should stall out and roll over before you hit new all-time highs. So the S&P 500 hasn't done that yet. It hasn't broke to new all-time highs. So it's still technically in a big bounce and potential double top phase. But overall, the market trend is up. You need to be long or definitely not short the market. And I think that's the key. I don't know really how to explain the markets anymore because I explain what I think is going to happen, which is bearish. But we still trade the trends, which is, if the markets are going up like they have been, we're going to be long. And so if I say I'm really bearish, then people for some reason trade the opinions versus what the charts are saying. And I share my opinions so that people have an idea of what could happen, so they have a plan of action if it does happen. But people trade rather what they think and feel versus what the actual charts are doing. And so at this point, the trends are up. You need to be long, or at least not, betting against the market. You shouldn't be betting on the market that's going down at this point. So that's kind of it, from a high level.
All right, thank you. Appreciate it, Chris. Where can we learn more from you and study your trading philosophy?
Sure. Yeah. The best spot is to YouTube on my channel, The Technical Traders, or on my website, thetechnicaltraders.com. And I share my ETF trades. You can see my red, green charts, copy the exact trades I do with my portfolio. And learn from the morning charts and copy the trades. Pretty straightforward.
Okay, great. Thank you. Appreciate it. We'll put the link down below, so follow Chris there. Talk to you next time, Chris. Welcome back.
Thanks, David. Take care.
Thank you for watching. Don't forget to like and subscribe.